Welcome to the Chicago Department of Business Affairs and Consumer Protection webinar. Please note any website or email that I mentioned will be posted in the chat. For those seeking business license assistance, you can visit the Small Business Center here at City Hall or call 312-74-GO-BIZ. Business license can be applied for or renewed online at chicagobusinessdirect.org. If you are a part of the BACP Entrepreneur Certificate Program, you get credit for joining this webinar by sending an email to bacpoutreach@cityofchicago.org. To learn more about this program, please visit chicago.gov/business education. This webinar is being recorded and will be available at youtube.com/Chicago BACP. We encourage attendees to ask questions. Please use the chat box to send your questions. There will be a Q&A session at the end of this presentation. At this time, I now turn this webinar over to Michelle for us to begin.
Good morning, everybody. My name is Michelle Kuipers. I'm with the Ladder Up Tax Clinic. We have a low-income tax clinic, and we're a nonprofit in Chicago that helps with taxes and financial capabilities, financial literacy.
Hi, my name is Tammy Gay. I am a Senior Stakeholder Liaison with the Internal Revenue Service, and I handle the whole state of Illinois. Part of my responsibilities is doing the outreach for the Internal Revenue Service, and I'll turn it over to Linda.
Good morning. My name is Linda Dixon, and I am a management and program analyst with our Information Management Resource Programs area. And I'm going to turn off my video because for some odd reason, I'm working at home today, and I don't know if it's the connection, but it is for some odd reason blinking in and out, and I don't want my presentation and the blinking of my video to get distraction. So I'm going to turn off my video and go into my presentation. Is that okay, Tammy? All right.
Yes,
thank you. And as I said, my name is Linda Dixon, and I am with Issues Management Resolution Systems Program. And today I just briefly wanted to discuss the IMRS and feedback. I will share a few success stories in case you're not familiar with Issues Management Resolution Systems. It was implemented to ensure that stakeholder liaisons respond to stakeholders' concerns. IMRS is an internal database that allows employees to track significant local and national issues concerning IRS policies, practice, and procedures, as identified by you, our stakeholders. IMRS allows stakeholders to gather data on issues and detect trends, monitor issues, and provide responses to communicate with greater efficiencies. Now, keep in mind, IMRS does not address individual account issues or tax law questions. Most of our issues come from the tax practitioner communities. However, we want to remind our non-tax practitioners, our non-tax pro stakeholders about IMRS. Simply put, IRS is listening, and we want to improve the taxpayer experience. We are actively soliciting feedback and issues. We are the folks who work issues identified by your stakeholder liaisons and elevating them to the national database, which is IMRS. The intentions of the system is to help us in effecting change within the IRS. Now, IMRS cannot force program owners to make changes to policies or procedures under their control. However, the system enables us to share areas of concern and possibly provide a means to improve work processes and promote voluntary compliance. Now that I've talked about what kind of issues can and cannot be worked in the IMRS program, I want to share a few success stories from our program. Now, we had an issue number 2359, where a stakeholder had raised a concern in reference to direct pay and the IRS web content. A suggestion was made that indicated payments should be made under the primary's SSN I-10. And then there was another suggestion as to the address that addressed first-time filers not being able to use the direct pay. So we elevated the request to the business owner. And then we got a response. Now, the direct pay FAQs were updated on September 16th, 2022 to address both of those concerns. And then another issue was raised, issue number 2362, and it referenced the Identity Protection IP PIN on paper form 1040X. Now, the stakeholder had raised a concern about FAQs for the IPIN, and in the Q&A section, it had indicated that the amended return must include IP PIN. However, the form 1040X, it did not have a place for you to even enter an IP PIN. So this concern was raised and elevated up, and the response was received from the business owner, and they indicated that they were currently discussing the addition of an IP PIN box on the next revision of the 1040X form. The IPIN frequently asked questions section was updated on September 21st, 2022 to distinguish between the IP PIN on paper as the IP PIN on e-file returns. So now let's transition and talk a little bit about feedback. We're also looking to identify feedback that we can act on. Now, feedback should include comments along with suggestions and or recommendations about IRS.gov content, news releases, fact sheets, tax tips, and the content of our presentations. Was the information or the product useful? How we can make it better? Next, I want to share an example of feedback that action had been taken on. So we had a tool called the ITA, which is an interactive tax assistance tool. Now, this tool is a product that provides answers to several tax law questions specific to an individual circumstance based on their input. So the feedback we had received after an SL provided a demonstration of this tool, the stakeholder indicated if it has Chinese or other languages options that will be more helpful. Now, the partner pointed out that the landing page had questions in Spanish, but the responses were in English. The stakeholder also inquired about making the tool and question and answers available in Chinese. We shared the feedback that had been received, and this was the response that we received. The ITA is being transitioned to the cloud, and it's on the business owner's radar to increase the number of other languages, but that won't happen until the spring of 2023 at the earliest. So now, in closing, I hope that by sharing this information about the issue management resolution system and the feedback was helpful to you. The key is the process starts with you, bringing up the issues and or feedback to your local stakeholder liaison. And in this case, it would be Tammy, about the IRS policies, practices, procedures, programs, and processes. as well as irs.gov content and event material. And if you have any questions, please feel free to put it in the chat, and I will definitely answer them. And then if I'm unable to, I will seek those answers and get them to Tammy so that she can get them back to you. I want to thank you for your time this morning, and I will now turn it back over to Tammy.
I think I'll be next, but thank you so much,
Okay.
Linda. This is it's fantastic to know that people can provide feedback to the IRS, and especially when we're about to talk about a lot of the tools that are available on the IRS website. If you are noticing problems with those tools, I strongly recommend you use the IMRS system. It's fantastic, and work with the IRS liaisons too. So my section is going to be about tax tips for self-employed individuals. I think that might be many of our audience today, and we're going to talk about some common issues and some non-common issues. We're going to talk about employment classification. We're going to talk about record keeping tips, both for preparing your taxes and also for examination and audit defense. So we'll get into that a little bit, but first I want to take a detour and talk about, well, my bona fides and Ladder Up's bona fides for talking about this subject. So as I mentioned a little bit before, Ladder Up is a nonprofit organization in Chicago, and actually servicing most of Illinois, all of Illinois, to provide financial resources to folks. And that includes education, but it also focuses a lot on tax, because tax touches everything, whether we like it or not, right? So our first and our biggest department is our tax assistance program. This is an IRS sanctioned volunteer income tax assistance program, or a VITA program. We prepare taxes for free for low-income individuals all around Chicago and the suburbs. And our income limits for that program are $32,000 for individuals, $60,000 for families. All of our sites are open now because tax season is in full swing. So if you would like to come to one of our walk-in VITA sites, you can go to our website, goladderup.org. And we'll put that in the chat before the end of this presentation, but goladderup.org. And if you're thinking, oh no, I don't fit those income requirements, we also have an online service. That online service can service all of Illinois, and it is in fact nationwide. It is not VITA, but it can help with people who might be a little bit out of scope for the VITA program. So I recommend, if you haven't had your taxes done yet, or you're interested in free tax preparation, head to our website, goladderup.org. We also have a low-income taxpayer clinic. This is a program that is through the Taxpayer Advocate, and it helps with individuals or small business, self-employed, who have controversies with the Illinois Department of Revenue or the IRS. So if you're receiving letters that you don't understand, if you have had an examination, if you owe money and you don't know how you're going to pay it and you just want some help, we can give advice, but we can also do full representation before the IRS or before the United States Tax Court. That's my job. I'm the attorney here at Ladder Up, and I'm the director of our tax clinic. So we're a little limited on who we can represent business-wise, but it doesn't mean I can't give you some tips and point you in the right direction. So if you are having a controversy with the IRS or State of Illinois Department of Revenue, please reach out to us. And then finally, we have a financial literacy program. It has two arms. One is the adult literacy track, which is where we help educate about credit building, banking. You know, if you're planning on buying a house, how am I going to do that? How do I budget? What are we talking about there? That's the adult track. And we also have a college success track where we help with the FAFSA program, or the alternative application for Illinois aid. It is a requirement of all Illinois students to complete the FAFSA to graduate from high school these days. So we're helping students with that. We're helping understand awards, helping find sources of funding for college, understanding if you're audited for your FAFSA or reviewed for your FAFSA. If you're looking at going to college, and you don't have to be a high schooler, if you're in college, if you're returning to college as an adult, if you're going to college for the first time as an adult and you want help navigating it, that is something that we provide as well. But we're mostly going to be in my sort of in the tax program here, where we're talking about small business, self-employed, how you're going to do your taxes. So let's start up first. If you're making self-employment income, how do you know when to file? Well, I have the answer for you. And luckily, if you're making self-employment income, if you get a 1099 at the end of the year, the answer is pretty simple. If you have net self-employment earnings of over $400, you must file your taxes. $400, easy to remember. So keep that in mind when you're getting your documents at the end of the year. If you go over $400 net, so you can include your expenses, but I'm hoping you're not spending $300 to make $400. You know what I mean? So $400, then you're going to have to file your taxes. But I talked about 1099. Well, what is that? Let's talk about the employment distinctions, right? So there are two types of sort of worker-employer relationships, and they're very important when it comes to your taxes. And this is your worker classification. If you are an employee, you're going to be either full-time or part-time, doesn't matter. But the thing to keep in mind is if you're an employee, your employer or whoever is paying you controls when you work, where you work, and how you work. They also pay for your tools and supplies, and they control your tax withholdings. They help take taxes out of your paycheck and prepay your taxes towards the IRS, prepay your Social Security taxes, prepay your Medicare, Medicaid taxes. So if you're an employee, you have some perks, but you have some detractors, right? The perk is that you have somebody helping with your withholdings. You get in a W-2 at the end of the year, you're filling out your W-4 form, but you're controlled with the when, the where, the how, and maybe what you wear, maybe the type of work you can accept or refuse. Somebody else controls all of that when you're an employee. When you're an independent contractor or self-employed, you get to control your own work. You get to control your own schedule. You get to be your own boss. But on the flip side, you have to pay for all the tools that you need. You're providing the car when you drive for Uber. You're providing all of your tools if you're a plumber, and you're driving to the place to do the plumbing jobs, right? And taxes are not withheld from your pay if you're an independent contractor. This is where your 1099 comes in. You receive a 1099 at the end of the year. It doesn't have anything withheld. It's just a statement of how much you were paid by somebody. And the other flip side is that you're going to have to be making your payments on your taxes in advance if you fall under that requirement. So let's talk about that section that's quarterly estimated tax payments or your self-employment taxes. So as an independent contractor, as I've said, you're not subject to withholdings. Nobody's prepaying your taxes for you. And nobody is contributing to your Social Security and Medicare taxes. Well, the IRS determined that, you know, we don't want to punish the people who are self-employed and make it so that they can't retire. We don't want it to be the case that you don't get to access Social Security just because you were starting your own business. So there is a self-employment tax on top of your normal income tax if you're self-employed. However, that self-employment tax, it's 15.3%, if you can see right there, but it is made up entirely of 12.4% Social Security and 2.9% Medicare. So when you're having to pay that little bit of extra tax at the end of the year, it doesn't feel good, but you're paying for future you. You're paying for your ability to retire and take Social Security when you're older. So don't be too down on it, because it is an investment in your future. Now, people who are classified as employees, you might be like, why do I have to pay 15.3%? What is this? People classified as employees also pay this tax. It just comes out of their paychecks with their withholding, and they have the benefit of their employer contributing towards that taxes. So when you're an employee, about half of your Social Security and Medicare taxes are paid by you, and about half is paid by your employer. Those of you in the audience who might be having employees and paying employees will know this already, is these are your payroll taxes. This is your FICA that you're paying on. But maybe some people aren't at that level, so don't worry too much about that. But one of the benefits of an employee is you get a little help with your future retirement. But one of the biggest perks being an independent contractor is that you can claim work-related expenses and reduce your total taxable self-employment income. And that in turn, if your income goes down, then your tax owed goes down. Perfect. And you may have heard this referred to before as writing off, right? I can write that off on my taxes. I'm going to write that off, right? I'm going to call it deducting work-related expenses, but you know, I get to be a killjoy sometimes. I got the degree for it. So let's talk about estimated tax payments though, because hey, even though you don't have to prepay your taxes, if you're self-employed, you don't want to be getting hit with a multiple $1,000 balance on April 15th. That's terrible. It sucks. It's also a way to quickly fast track yourself to penalties, and we don't want that. So what are estimated tax payments? How do I pay them? What do I do? So estimated tax payments are that 15.3% self-employment tax. If you are expecting that you will owe more than $1,000 in taxes on your return, then the IRS expects you to make estimated tax payments. These are prepayments of tax, that 15.3%, and it goes quarterly. So it's once per quarter, and I have the due dates over there on the right. It's every 3 months on the 15th is typically the due dates. There are a couple of ways to calculate this. The most accurate way is to use the handy 1040 ES form. ES stands for estimated. And that is a way to very accurately calculate. Another way to do it is to take 15.3% of your income for the 3-month period and send that to the IRS. And another way is to base it on last year's return, but that's the least accurate because you might have changes to your income. We never can tell, right? So looking backward, past 3 months, 15.3%, send that in advance. This lets you dodge penalties because there is a penalty if you are expected to owe more than $1,000 and you haven't made estimated tax payments. So now that we've covered the difference between worker classification, and now that we've covered the sort of prepayment estimated tax payments, let's talk about business record keeping. This is something that I think a lot of entrepreneurs and self-employed folks and gig workers don't think about until maybe they sit down with their tax preparer and they go, oh no, I have no idea. So let's talk about some of the best things, some of the best tools. And I know this is a long list, there's a lot here, but you can take it sort of one step at a time. It's really good to have a business plan. This is going to be sort of what your next 5-10 years are going to look like for your business and how you're aiming to grow. This isn't just for tax purposes. This is sort of so you can have a guide for what you're doing and how you're going to grow your business. I want to recommend a resource that I recommend all the time. It's a free resource. It's called score.org. Score like basketball, right? Score.org. It's free business mentoring. It helps with business plans. There's a ton of resources on that website that you can refer to if you are getting started with your business, or maybe you're hitting that point where you're like, man, I really should get a business plan. Man, I really should figure out where I'm going with this business because I want to make it grow. So score.org. A business calendar is a good resource because it just keeps in mind everything. If you're having appointments, if you're the type of business that has deliveries or deadlines or things like that, a business calendar is going to be a great resource. And we will show you what that looks like in just a little bit. A business bank account is one that I recommend to everyone because you can keep your business income and your business expenses separate from your personal income and personal expenses. This is also the one that people do maybe last because, it's hard and annoying to open a bank account. I understand, but it is sort of the easiest way to start your business record keeping. Just have a bank account that's dedicated to the business and start using that exclusively. Money comes in there, it's the business. Money goes out of there, it's the business. We'll go through some of these too. So a logbook is where you're going to log income and expenses. It's going to match your receipts that we're going to save at the end, your receipts and bills for the business. And then finally, a mileage log is invaluable if you're going to deduct mileage. If you're doing gig work and driving Uber, that sort of thing, a mileage log is invaluable. If I mentioned the plumber, if you're driving around the city all the time, a mileage log is going to be so helpful for reducing that tax balance that you have because you're driving around all the time. You need credit for that, right? So let's look at a business calendar. It's pretty easy. This one is paper and handwritten. However, there are apps you could use there. You can use the calendar on your phone as long as you keep it separate for your business. There's ways to do it digitally if that is what your native method is, or that's what you're more comfortable with, or I lose paper all the time. If I would like to just have it handy, right? So keep that in mind as I'm showing you handwritten ones. It doesn't have to be handwritten. This is just the easiest way, I think, to visualize. So with a business calendar, you're going to have the date. You're going to have what the event was or what the meeting was. You're going to have the location and you're going to have the purpose. You're probably also going to have who you met with, right? This is really handy because if you have a mileage log, where you went is going to match your mileage log. Who you talk to, if you make a deal and then you get paid, that's going to match your logbook. So the best thing here is to sort of marry all of these record keeping tools together so that they all match each other. In this case, we're using an example of a person who is a masseuse, right? Somebody who gives massages. So their calendar is a massage conference they went to, a work conference, and then a business lunch, and then appointments for massages. They can keep track, and the appointments they have here where they gave massages are going to match the income that they have coming in. So that's one of the benefits of keeping a business calendar. Let's look at a logbook. Oh, this one has got some small text, but this is kind of what I want you to think about for a logbook. You're going to have the date of the event. You're going to have a description of what happened, right? Money coming in, money going out. What did you spend? You're going to have a description. This person is utilizing codes for it, as in, whether they're appointments or whether they're events or whether they're conferences. But what's really important, you don't have to create these codes for travel or things. It is helpful, but this, I would say, if you're just getting started, let's focus on date, description, income. If it's coming in, you got this column for what came in, expenses, a column for what went out, and then you got totals, right? This is going to be invaluable for you. When you're coming to do your taxes, if you don't have a code at the start, categorizing all of your expenses on your taxes is going to be super helpful for preparing them. And then if you ever get examined on your taxes, if the IRS says, hey, we would like to see some evidence of what you've claimed on your Schedule C, you're going to be able to provide that. You're going to say, here's my logbook for the year. I've already got it. Here's my receipt. I've already kept them. Please look at it because you're confident that you kept your records and you've filed your return accurately. All right, let's look at what a mileage log looks like, because you've got your calendar events appear on here on your logbook if you have income coming in or going out due to those calendar events. And let's log our drives, right? So for a mileage log, very simple. And again, there's apps for this, right? You're going to have the date, you're going to have your destination or your purpose of the trip, and then you're going to have your beginning mileage on your odometer, your ending mileage on your odometer, and then your total mileage, business and personal, because when it comes down to your taxes, if you have a mixed use vehicle that you're using sometimes for business, sometimes for personal, you got to calculate how many miles per year that you did for business purposes and for personal purposes. So mileage log, incredibly easy. We will talk about commuting, because your first trip of the day and your last trip of the day home, first trip from home, last trip from home to home, those ones are your commute and they don't get to be claimed as mileage for business. But everything else in between, if you're doing it for business purposes and not personal purposes, can be claimed for mileage. And I want to point out something here, which is that those people who maybe are doing gig work on the side, are driving for Uber, are using, deliveries for Grubhub or something like that, those apps often keep track of your mileage for you when you are on a call. So when you are picking something up, like a person or a meal, and then taking it to its destination, it logs that mileage. But what it doesn't log is the trips between. So say you've dropped somebody off who was a passenger in your car, and then you drive 5 miles away to the next person. It's not logging those 5 miles. And those are business miles because you're between jobs. So the reason why I want you to keep your own mileage log is because maybe what you're relying on from your contract payers is not accurate to your taxes and your situation. So keep your own mileage log. Highly, highly, highly stress to keep your own log. All right. So let's talk about that commuting thing, because this is one that trips people up quite a lot. So if you do not have an office in your home, we'll talk about an office in your home in just a second, but if you do not have an office in your home that you work out of, your first trip of the day and your last trip of the day is your commute. This is to even the playing field between employees and independent contractors. I'm an employee of Ladder Up, and that means I don't get to have my job pay for me when I come into work and then when I go home. So that's evening the playing field a little bit. So you can see for somebody who just goes to one location on the left here, Mark's going from his house to his studio where he does his work, and then he's going home. He does not get to claim any of those mileage. On the right, though, you can see Mark, he's traveling around a little bit, right? He's done his first trip. He goes to a client's house. That's his commute for the day. Then he does another trip. That one's for work too, going to another client. That one he gets to claim the mileage on. Then he goes to a printing company, pick up some prints for work that he's printed out, some flyers or marketing material. That's a business trip. He gets to claim that one. But then he returns home. That's his commute. So he doesn't get to claim that first trip, doesn't get to claim that last trip. but he can claim those other 2 trips. One exception to this rule is if you qualify for the business use of your home, if your office for your business is in your home, and this has special requirements about it. It means you have a dedicated space in your home that is not used for personal purposes at all. It is only used for business purposes. Like our massage guy, right? He's got, if he has a massage studio in one room of his house and the only purpose of that room is the massage studio for his business, then he has business use of his home, and every trip he makes for business doesn't have to be commute. Every trip he makes for business, he can claim the mileage on. This is more rare than you think. I think a lot of people try to take business use of home when maybe they mix use the space. I was talking to another organization where somebody gave the example of caterers, and they use their kitchen to make all the food for their catering company, but it's their home kitchen. That is going to be a case where that's a mixed use. That's not a business kitchen in your home, so they are not able to claim that business use of home exception, and they're not able to claim their commute as miles on their business Schedule C. So that one's a little confusing. We might get some questions about that at the end. So if you have questions about that, pop it into the chat. All right. Let's talk about one more thing, which is business entities. This one I get a lot of questions about from self-employed folks who are like looking to grow their business. What type of entity should I do? We're not going to talk too much about sort of the legal protections with those entities, but what I do want to talk about is the forms that you are going to receive or use for those entities. And Tammy's going to talk a little bit about IRS tools and resources for the different business entities in just a little bit. So stay tuned for that. But if you have not contacted your state or any state and paid any fees to make yourself a business entity, congratulations, you are a sole proprietorship. Form that you're filing is a 1040, the normal tax form, but you will be including on it a Schedule C or a Schedule CEZ and Schedule SE. Schedule C is where you claim all of those employment deductions, where you're putting your mileage and where you're putting your business expenses, and you're putting your business name if you've got one. Schedule SE is SE for self-employment. And then Schedule ES we talked about. I know SEES. ES is estimated tax payments. Don't forget, if you're going to owe more than $1,000 of taxes, you need to be prepaying through estimated tax payments. So that's what sole proprietors need to keep in mind. Not too much, just a little bit of additions to your normal tax form. If you have a partnership, you're going to add to that a form 1065. So if you have a partnership with somebody else and it's a formal partnership, you have one extra tax form, and then both partners are going to do all those things the sole proprietor would do. If you have a limited liability company that you have filed for and paid, which BACP can help you if you want to do that with resources on how, then you're going to have an extra form, an 8832. And then as we move into different entity types, it gets more and more complicated. So if you're a limited liability company and you're paying people, then you're going to be paying payroll taxes and FICA. You're going to be issuing W-2s or 1099s. If you're a corporation, you get more complicated. You're going to have an 1120. And there's a point at which I'm going to recommend you start using a CPA or somebody who is extremely familiar with these types of things, and you try not to navigate it on your own. Using somebody who's a professional is going to offer you protections. So, and they'll be able to walk you through the return before you sign it, because keep in mind, you are responsible for what you sign on that return. Even if you're sole proprietorship, you're responsible for what appears on your tax return. So using somebody who you can trust and who is a professional tax preparer is going to be invaluable to you. And luckily, IRS has a tool for finding tax preparers who are professional certified. So, and then finally, S corporation. This is we're getting into the very complicated ones. There's a lot of forms for S corporations. Your 1120, that was for your corporation. You're giving out K1s to your partners. You know, these are all pretty heavy stuff. So this is where if you're moving into that department, I would recommend you speak to somebody about your structuring. So this is going to be the end of my portion, and I'm going to throw it over to Tammy here for how IRS website and IRS can help you with resources.
Thank you, Michelle. That was a great presentation. So let's just talk about some tax tips for entrepreneurs starting a business and operating a business. Next slide, please. During my presentation, I'm going to talk about tax information for businesses, starting a business, information on operating a business, as well as some IRS tools and other federal resources. Next slide, please. I do want you to visit our tax information for business page, which is available in several different languages. You can go to irs.gov/businesses, and it'll take you to the page that you see on the screen. This page has a lot of information to assist you with your business taxes. Next slide, please. One of those options on that page, on that previous page, was the starting your business page. So if you're starting a business, this is the first page you want to go to in regards to the Internal Revenue site. It has all of the information to assist you in making basic business decisions. The list will show you, it's not all inclusive of what I'm going to talk about, but it will have all of the information that you actually need. It'll have information on what's new for business owners and what you need to know about your federal taxes. Is what you're doing really a business, or is it a hobby? Is you selecting the correct business structure? Do you really need an employer identification number known as an EIN? Record keeping? When do you actually start your tax season? So that page is going to be your first stop. Next slide, please. I discussed previously on whether or not the activity you're doing is actually a business or a hobby. This is just some information for you to think about when you're making that determination. You want to know these 9 things: whether the activity is carried out in a business-like manner and the taxpayer maintains complete and accurate books and records, whether the time and effort the taxpayer puts into the activity shows they intend to make a profit, whether you depend on income from the activity for your livelihood, whether any losses are due to circumstances beyond your control or are normal for the startup phase of your type of business, whether you can change methods of operation to improve profitability, whether the taxpayer and your advisor have the knowledge needed to carry out the activity as a successful business, whether you were successful in making a profit in similar activities in the past, whether the activity makes a profit in some years and how much profit it makes, and lastly, whether you can expect to make a future profit from the appreciation of the assets used in the activity. The IRS has many resources to help taxpayers report their income correctly. Next slide. Michelle mentioned the different business structures. There is a specific page on the irs.gov website that breaks down each of these business structures. You know, it doesn't matter if you're a sole proprietor, a corporation, or an S Corp. If you just click the link, it'll take you to a page specific to the type of organization you are determining that your business is, the business entity. It'll have all types of information, as well as if you were to click, let's say, the sole proprietorship. Michelle mentioned that you file your form, the Form 1040, you will include a Schedule C or CED. If you click that link, it'll link and provide you with the different form numbers that Michelle discussed for each of those business entities. So please keep that in mind. Next slide. I mentioned the employer identification number. That's the EIN. Not everyone knows or are sure on whether or not they actually need an EIN. The Internal Revenue Service has a specific page that provides you with that information. Please remember, there's various ways that you can actually apply for an employer identification number, and now you can actually apply yourself online. This is a free service offered by the Internal Revenue Service. It'll allow you to get your EIN immediately. This page also has the basic questions, answers to your basic questions. Do you need an EIN? How do you apply for an EIN? What if you have an EIN and you lost or misplaced it? What to do if you're assigned an EIN and you didn't even request one? Because we know things happen. Things do get messed up from time to time. This page, the employer identification number page, will provide you with all of that information. Next slide, please. So I mentioned applying for EIN online. If you go to irs.gov/EIN, you'll be able to click that link and apply online for your new EIN. It's just 3 simple steps. Step 1, it'll help you determine your eligibility. Step 2, it'll help you understand the online application. And then in step 3, you're just going to go ahead and submit your application. If your application is accepted, then you'll get your EIN immediately. Keep in mind that you will also be able to download, save, and print your EIN confirmation. You do want to keep that as part of your records. So if if you like me and you have a tendency of forgetting things, all you have to do is look and be like, oh yeah, this is the correct EIN. Next slide, please. Keep in mind, the form of business you operate determine what taxes you must pay and how you pay them. The 5 are the general types of business taxes. You have your income tax, estimated taxes, self-employment tax, employment tax, and excise tax. Michelle already went through the estimated taxes, self-employment taxes. Let's just talk a little bit about your excise tax. Now, if you are on the irs.gov website and you click the excise tax, this section is going to describe the excise taxes you have to pay and the forms you have to file if you do any of the following. If you manufacture or sell certain products, if you operate certain kinds of businesses, if you use various kinds of equipment, facilities, or products, and if you receive payment for certain services. If you click that link, it's going to provide you with information on things that you need to do. Just to go over quick for the employment taxes as well, just keep in mind, it's very important that you deposit those employment taxes. They must be deposited on a timely basis. When you have employees, you as the employer have certain employment taxes that you must pay and forms you must file. Employment taxes include Social Security and Medicare taxes, that federal income tax withholding, as well as federal unemployment tax. So keep those 2 in mind as well. Next slide, please. This page, I'm just gonna highlight some information on the estimated tax pages. Again, the Internal Revenue Service has a lot or a wealth of information for you. There's videos available that you can watch that'll provide you with some general information. Keep in mind, if you go to the how to figure your estimated tax portion of this page, it'll provide you how you determine, your adjusted gross income. When you're figuring your estimated tax for the current year, it may be helpful to use your income, deductions, and credits from your prior year, but only as a starting point. You'll use your prior year's federal tax return as a guide. And remember, it is only a guide. But there's also a worksheet in the Form 1040-ES to help you figure your estimated tax. You need to estimate the tax amount of income you expect to earn for the year. If you estimated your earnings too high, you'll just simply complete another Form 1040-X worksheet to refigure your estimated tax for the next quarter. Because we all know, you may think that you're going to make one amount and you wind up making something else. That's just the way business works. You never really know. Keep in mind that you may make adjustments both for changes in your own situation and for recent changes in the tax law. I do want to talk about the penalty for underpayment of estimated tax. If you didn't pay enough tax throughout the year, either through withholding or by making estimated tax payments, you may have to pay a penalty for underpayment of estimated tax. Now, generally, most taxpayers will avoid this penalty if they owe less than the $1,000 that Michelle mentioned in tax after subtracting their withholding and credits, or if they paid at least 90% of tax for the current year, or 100% of the tax shown on the return for the prior year. So whichever is smaller. There are specific rules for farmers, fishermen, and certain higher income taxpayers. There is a publication. That publication is 505, Tax Withholding and Estimated Tax. And you can use that publication for additional research. I'm sorry, for additional information. In order to get that publication, you can go to the IRS.gov website and just type in publication 505 in the search box. It'll come right up for you. Next slide, please. I did mention the employment taxes. Again, if you're self-employed, you can visit the Self-Employed Individuals Tax Center page for information on your tax obligations. It'll have information on understanding employment taxes, depositing and reporting your employment taxes, the employment tax due date, corrected in your employment taxes, and e-filing employment tax forms. If you need to update your business address, information is available on that web page as well. Keep in mind, it is very important for you to keep your business address updated as well as your personal address. You always want to make sure your address is updated with the Internal Revenue Service. Next slide, please. So a lot of employers like to outsource their payroll responsibilities. If you do this, you are allowing a third-party payroll service provider to actually handle this for you. That third-party payroll service provider can help assure your filing dates and deposit requirements are met and greatly streamline your business operations. But I do want you to remember, employers are ultimately responsible for the payments of income tax withheld, and both the employer and employee portions of Social Security and Medicare taxes. Keep in mind, even though you do have an arrangement with a third party, you are the responsible party for your business information. Next slide, please. Michelle went over information in regards to record keeping, so I'm not going to bore you with going through all of the information that she already went through. But keep in mind that everyone, if you are in a business, you must keep records. Keeping good records is very important to your business because good records will help you in several ways. It's going to allow you to monitor the progress of your business. It helps you prepare your financial statements. It's going to help you in regards to your income statement. It'll identify sources of receipts. It'll help you keep track of deductible expenses, as well as if you do go and get your tax return prepared, it's going to help you get your tax return prepared accurately because you will have all of the supporting information you need to provide your tax return prepared. Next slide. So record keeping time frames, there's different time frames for each type of entity. For the period of limitations that apply to income tax returns, you'll keep records for 3 years if situations that I'm going to discuss apply to you below. As well as it's going to be the situations that I go through, it's going to be the 4th and 5th and 6th situation. those are be extenuating circumstances. In general, you'll keep records for 3 years from the date you filed your original return or 2 years from the date you paid the tax, whichever is later. If you file a claim for credit or refund after you file your return, it's going to be that 2-year limit as well. Keep in mind, you should keep records for 7 years if you file a claim for a loss from worthless securities or bad debt deduction. You're going to keep your records for 6 years if you do not report income that you should report, and it is more than 25% of the gross income shown on your tax return. You'll keep records indefinitely if you do not file a tax return. You will keep records indefinitely if you file a fraudulent return. You're also going to keep employment tax records for at least 4 years after the date that the tax becomes due or is paid, whichever is later. And let's just go through some quick questions. Are the records connected to property? If your records are connected to property, generally you will keep records relating to property until the period of limitation expires for the year in which you dispose of the property. You must keep these records to figure any depreciation, amortization, or depletion deduction, and to figure the gain or loss when you sell or otherwise dispose of the property. So that's one of those extenuating circumstances. Keep in mind, if you received property in a non-taxable exchange, your basis in that property is the same as the basis of the property you gave up. So increased by any money you paid. You must keep the records of the old property as well as on the new property until the period of limitation expires for the year in which you dispose of the new property. If you have any questions in regards to this, keep in mind, you can always search these things on the IRS.gov website. And again, that's going to be under the small business, self-employed, how long should I keep records? So IRS.gov, type in, how long should I keep records? It'll bring you up with all of this information. Next slide, please. Now, you can choose any record keeping system you want. I mean, every business is different. The most important thing about you keeping these business records is that you need to make sure that they clearly show your income and expenses. The business you're in is going to affect the type of records that you need to keep for federal tax purposes. Your record keeping system should include a summary of your business transactions. The summary is ordinarily made in your business book, for example, your journals or your ledgers. Keep in mind, your book must show your gross income as well as your deductions and taxes. For most small businesses, the business checking account is going to be a vital part of your business book. Next slide, please. Now, a good record keeping system includes a summary of your business transactions. Your business transactions, again, are ordinarily summarized in your book called those journals or ledgers. As Michelle mentioned, you can use different types of software to keep track of your information, but you can also go to your local office supply store and get a physical book. If you're that type of person, you'd rather write it on paper than keep things electronic. Those are options for you as well. A good record keeping system for small business might include some of the following items: your business checkbook, your daily or monthly summary of cash receipts, your check disbursement journals, any depreciation worksheets you have, as well as your employee compensation record. Keep all of those things. Next slide. Electronic records. Now, some businesses choose to use those electronic accounting software programs or some other type of electronic system to capture and organize your records. All requirements that apply to hard copy books and records, they'll also apply to any electronic accounting software that you use. Um, the electronic system must provide a complete and accurate record of your data that is accessible to the IRS. The system you use to record your business transactions will be more effective if you follow good record keeping practices. For example, you should record expenses when they occur and identify, excuse me, I don't know what happened, but you want to identify the sources of income. Generally, it's best to record transactions on a daily basis because we all know we forget things from time to time. There is a publication 583, Starting a Business and Keeping Records, that's available on the IRS.gov website. And you can get this publication just by searching publication 583. Next slide, please. The system you use to record business transactions will be more effective, again, if you follow good record keeping practices. For example, you record expenses, again, when they occur, and you identify the source of those receipts. Again, I know I've already stated that it's best to do it daily. That way you won't have any issues in regards to trying to remember something. It comes back incorrect if you're ever audited. You want to make sure your records are as accurate as possible, and doing that daily is one way to do it. You do also want to make sure you reconcile your accounts regularly. You retain any deposit information in those receipts, and you use any business account. You use a business account for all of your business information or transactions. It'll be a lot harder if you attempt to use your personal account for both business and personal items because you may overlook something and you don't want to cause yourself any unnecessary issues. Next slide, please. Some of the supporting documents you should keep is your gross receipts. And gross receipts are the income you receive from your business. You should keep those supporting documents that show the amount and the sources of your gross receipts. You can use any of these documents, your cash register tape, your receipt book, your credit card charge slip, to have that documentation as needed. Next slide, please. When it comes to purchases, those are items you buy and resell to customers. Now, if you're a manufacturer or a producer, this will include the cost of all raw materials or parts purchased for manufacturer into finished product. Your supporting documents can show the amount paid and the amount that you use for purchase. So the amount that it costs you to purchase the item. Documents for purchases can include any canceled checks you have, any cash register, tape receipts, again, any credit card receipts, any invoices. So just keep all of those to anything that you use in order to show what you purchased. Next slide, please. When it comes to expenses, your expenses are the costs you incur to carry on your business. Your supporting documents should identify the payee, the amount paid, proof of payment, and the date the transaction occurred. And you also want to include a description of the item purchased or the service you received that shows the amount was for the business expense. Documents you can use for expenses include, again, canceled checks or other documents reflecting the proof of the payment, being a cash register receipt, a credit card receipt or statement, or invoices as well. Next slide, please. When it comes to your assets are the properties such as the machinery and furniture that you own and use in your business. You must keep records to verify certain information about your business assets. You'll need records to compute the annual depreciation and the gain or loss when you sell the asset. Now you can document these types of documents you can use for your assets. You will have to have something that'll show your purchase price, if you made any improvements, the cost of the improvement, any deductions you're taking for depreciation, and when and how you dispose of the asset. That's just some of the things that you'll need to use. Keep in mind those invoices that we've talked about throughout my presentation. You'll want to keep the invoices of your purchases and sales for your assets as well. Any real estate closing statements, you'll want to keep those as well. And of course, those canceled checks. Next slide, please. Operating a business. The IRS.gov does have a specific web page for operating a business. On this page, it'll give you the information that'll link you to different pages like the employer identification number, that EIN that I discussed previously. It has a link for record keeping to go over everything that I've already discussed in regards to how long you should keep your records. If you need to change the name of your business, it'll have a page there for that as well, a link to a new page. Now, if you're running a business with employees, there's a link on that page, excuse me, that'll take you through the information that I previously discussed. And I'm going to apologize. I'm starting to lose my voice, so let me take a quick sip of water. Hopefully I sound better and I don't sound as crazy as I was beginning to sound. So I apologize for that. As well on this page, it has some good information on educating your employees about tax compliance. You know, you can use these communication products to help your employees understand their tax compliance responsibility and help them understand how they can find IRS resources to file and pay their taxes on time. Paying independent contractors, there's information there on if you pay independent contractors that you may have to file a Form 1099 NEC, non-employee compensation, to report payment for services performed for your trade or business. As well as what's the difference between taxable and non-taxable income. So that's just some of the information that's available on operating a business page, as well as information on those estimated tax payments, because we don't want you to have to pay that penalty. So keep that threshold in mind. And if you're not sure, go to this page and find out about the estimated tax payments, as well as any business tax credits that you may actually be eligible for that you didn't know. It never hurts to do a little research. Next page, please. Now, reporting all of your taxable income. You can receive income in the form of money, property, or services. This section is going to discuss many kinds of income that are taxable or non-taxable. It's going to include discussions on employee wages and fringe benefits and income from bartering, partnerships as corporations, and royalties. This information on this page you shouldn't think that this is all inclusive. This is just an overview of the different types of income. Generally, an amount included in your income is taxable unless it is specifically exempted by law. Income that is taxable must be reported on your return and is subject to tax. Income that is non-taxable may have to be shown on your tax return, but is not taxable. A list is available in publication 525, taxable and non-taxable income. And again, the way to get that publication, you're just going to search irs.gov and put in publication 525. You are generally taxed on income that is available to you, regardless of whether it is actually in your possession. So a valid check that you received or that was made available to you before the end of the tax year is considered income constructively received in that year, even if you do not cash the check or deposit it to your account until the next year. Let me give you a quick example. If the Postal Service tries to deliver a check to you on the last day of the tax year, but you're not at home to receive it, you must include the amount of your income for that tax year. If the check was mailed so that it could not possibly reach you until after the end of the tax year, and you could not otherwise get the funds before the end of the year, you include the amount in your income for the next year. When it comes to assignment of income, that's income received by an agent for you. And if they received it constructively in the year the agent received it, then you receive the income. If you agree by contract that a third party is to receive income for you, you must include the amount in your income when the third party receives it. Let me give you an example. You and your employer agree that part of your salary is to be paid directly to your former spouse. You must include that amount in your income when your former spouse receives it. When it comes to prepaid income, such as compensation for future services, in general, it's going to be included in your income in the year you receive it. However, if you use an accrual method of accounting, you can defer prepaid income you receive for services to be performed before the end of the next tax year. In this case, you include the payment in your income as you earn it by performing the services. Keep those things in mind. Bartering is just the exchange of goods or services. Usually there's no exchange of cash. An example of bartering is a plumber exchanging plumber services for their dental services by a dentist. Bartering doesn't include arrangements that provide solely for the informal exchange of similar services on a non-commercial basis. So let me give you a quick example. A babysitting cooperative run by the neighborhood parents, that would not be that wouldn't be included as bartering. Now, keep in mind, there is a specific tax topic if you need more information on bartering, and that's going to be tax topic 420. So tax topic 420, and as always, with any resource I give you, if you go to irs.gov and put that in your search box, it'll take you directly to that information. Next slide, please. Business tax credits, there's a specific page on that. It'll provide you all of the information, including the Internal Revenue Code for those business tax credits. Next slide, please. I see we're running slow on time, so I'm just going to go through this information, but I'll give you all of my resources of where I'm providing you the information from. You do want to make sure you protect your financial and tax records. So there is a specific page for preparing for a disaster that I have some excellent tips for you to help you determine which documents you should keep, different areas, and let you know that you can keep these records electronically as well. So if you search disaster planning on irs.gov, it'll provide you with a wealth of knowledge. Next slide, please. Just some common tax errors for small businesses. Remember, I talked about underpaying estimated taxes and the possibility for a penalty. If you don't deposit your employment taxes that's an error as well. And you do want to make sure you file your returns on time. You do not want to file your taxes late. And we already discussed how important it is to keep your personal and business accounts separate. Next slide, please. There is a directory that's available on the irs.gov. It can actually help you choose a good tax return preparer. If you go to irs.gov, if you search directory of federal tax return preparers, it'll take you to a specific page. On that page, it'll tell you whether or not the tax return preparer that you are thinking about using is actually qualified in the IRS eyes. And it also has some information there that allow you to know what to do just in case you come across someone that is not reputable. Next slide, please. There are different ways for you to file and pay your taxes. We always suggest that you do it electronic. Electronic filing for businesses, you can file that Form 1120, any of your Form 1120s. You can file Form 7004, your Form 1041, excise tax forms, your 1099s, anything that your business is doing, there is a way for you to file them electronically on the irs.gov website. Keep in mind, if you are paying, it is in your best interest to pay your taxes online. You can pay them with a debit or credit card, your digital wallet, that's the PayPal. There's different ways for you to pay. You can always go to, again, the irs.gov website and just search pay taxes. Next slide, please. There is a system, EFTPS. It's a free system offered by the U.S. Department of Treasury to pay your federal taxes. Now, EFTPS offers security you can count on. When you're making your electronic federal tax payment, you'll use 3 pieces of identification safeguards. It's going to allow you to safeguard your privacy, and it secures your information. The use of your taxpayer identification number being your EIN or your SSN, it will allow you to use those things to be able to protect yourself. You can also use it with your PIN, I'm sorry. It's going to allow you to use a PIN as well, and then you're going to give yourself an internet password to get into that system. Just to make sure you're using a secure browser. It'll allow you to schedule your payments up to 365 days in advance. You can make your tax payments at any time because it's open, it's online. It's going to be open 24 hours. You can pay your income tax, your employment tax, your estimated tax, and any excise federal taxes on that page as well. And then you can track your payment with the email notifications just to be sure that it went through, and that's something that you can save and keep in your records. It'll also allow you, let's say that you lost the records and for whatever reason the payment is not showing, it will allow you to view 15 months of your payment history by using the EFTPS system. So that's a good record keeping system for you as well. Next slide, please. Identity theft, we know identity theft is a big thing for everyone, not just personal. Businesses are being attacked as well. You do want to know the signs of identity theft. So you do want to be alert to any possible business identity theft. Let's say you can't e-file a return if you're a return preparer because one was already filed. Or if you're trying to do your business return and it says that you already filed your business return and you know that you didn't. If you get a rejection, that is something else that you want to look out for. And if you receive an unexpected transcript or any notice from the Internal Revenue Service and something doesn't seem right, you want to look into making sure that your records are up to date. You do, if you are a victim of or that you suspect, that you're a victim of identity theft, there are several steps that you want to make sure that you take. All of that information is available on the irs.gov. There's even a data security plan. That's publication 4557. That's available to help you to help make sure that your data security is up to par, excuse me. You do want to make sure that your employees are aware of malicious malware, not opening up any type of emails that don't look right. Um, if you or your employees ever receive these type of suspicious emails, you can actually forward it to phishing@irs.gov so we can actually look at it and try to track down the culprit. Next slide, please. I do want you to stay informed. The best way to avoid tax trouble is by staying informed. Remember, knowledge is power. Keep in mind, it is best to get the Internal Revenue information from who else? The Internal Revenue Service. We are on social media as well. So I will say in regards to social media, you want to go to irs.gov/social media. It will make sure you get the correct Internal Revenue Service and social media handles, because with any and everything, even the IRS, scammers or spoofers, they are trying to say that they're the Internal Revenue Service when they are not. It could be something as simple as them putting an L instead of the I, but it looks like an I, but it's really an L. And you think that you're actually getting the information from the Internal Revenue Service, but it's not the Internal Revenue Service. It's actually a spoofer trying to pretend like they are. So irs.gov is always your place to go. I talked about the small business portal when I was talking about your EIN, and that there's videos that you can see for getting your EIN. There's all different types of videos that the IRS produces. If you go to irsvideos.gov/business, it'll take you to that portal and you can get a lot of information from there. Next slide, please. The Small Business and Self-Employed Tax Center, just go to irs.gov/small business and it'll give you information there on everything we discussed, and it'll have links to the different links that I gave you in regards to your EIN, the different type of partnerships. All of that information is there. Next slide. I would suggest that you sign up for e-news for small businesses. It'll keep you in the know of what's going on at the Internal Revenue Service in regards to small businesses. It'll tell you what's new for small businesses. It'll give you reminders and tips to assist your small business with tax compliance. And you can sign up for that by just searching e-news on irs.gov. Next slide, please. I've already mentioned the IRS social media. If you search social media, this is the page that's going to come up, and then it'll provide you links to where you can find the IRS information. Next slide, please. That's just how our video portal that I just mentioned looks. So you know you made it to the right page. If you go to the irsvideos.gov and you see this populate for you, as you see, it is available in different languages and have different categories. So you can just go to the specific category that you're interested in, whether or not it's for business. If you just want to look up some information for you as an individual, there's videos there for you as well. And our next slide is just our small business tax workshop. There's videos there. There's several different lessons. Part of those lessons is lesson 2, which is Schedule C and other small business taxes. What about lesson 8? If you're thinking about hiring people, that is hiring people who live in the US who are citizens. So there's all different types of videos there for you. Next slide, please. We mentioned how important it is for you to make sure you make your tax payments on time. There is an online tax calendar. It is available in both English and Spanish. It will help you keep track of when you need to make your tax payments. If you search, of course, online tax calendar, it'll take you to this page. Next slide, please. This is just some publications that'll be helpful for you. That publication 1, Your Rights as Taxpayers. That publication 334, Tax Guide for Small Businesses. I've already mentioned that publication 525, Taxable or Non-Taxable Income. Next slide, please. Some additional resources, publication 5557, A Guide to Starting a Small Business. That publication 587, Business Use of Your Home, because I know Michelle discussed that. That is a great publication for you to get more information on as well. And then publication 505, that tax withholding and estimated tax. Okay, oh, I said a mouthful. I wanted to make sure we had some time to get to some questions. So let's see if we have any questions out there. And thank you all for your time.
Yes, thank you everybody for your time and your attention. I know it's been a lot. I don't know, I can start going through the chat and maybe saying some things out loud. Unless somebody from BACP would like to facilitate questions.
Let's see.
On Zoom, send you the panel.
I'm in the Q&A. I don't know what's going on with this chat. Sometimes we have to activate it, then sometimes we don't. Okay, in the Q&A section, we have 11 questions.
Okay.
Can you please give the address again as to where this is going to be uploaded? It's going to be uploaded on Chicago on our YouTube page at youtube.com/Chicago BACP. Again, that's youtube.com/Chicago BACP. What if you are retired and doing self-employment gigs?
That's a great question. And you're not alone. A lot of people who are retired are doing sort of gig work these days, you know, maybe a little Uber here, maybe a little like delivery there. That means that your taxes are a little bit more complicated because you will have whatever your retirement income is. This may be Social Security, might be 401k, might be IRA, it might be a pension, might be a mix of some of those. So you'll have that income as well as your self-employment income from your gig work. So you're going to get some 1099s and you can claim expenses related to that gig work because you'll have a Schedule C just for your gig work, your self-employment there. So you get a little bit of both, a little bit of a retired tax return, a little bit of a self-employed tax return, all in the same bucket.
Can I request my S corporation letter? My business files as S corp, but I don't have the actual letter that I may have received 15 years ago.
Tammy, maybe you can help with this one because I'm not sure on this one.
Well, with that being over 50 years ago, it may not be available. I would suggest that you contact the Internal Revenue Service by calling the customer service line at 800-829-1040 and see if that's something that can be duplicated. I'm not sure if they can actually duplicate it. This is so long ago.
Next question. With so many calls and even letters received about the ERC, is the program legit or only for some employers?
The employee retention credit is an actual credit that some individuals may, or some businesses may be eligible for, but I do want to make sure you keep in mind the Internal Revenue Service won't call you concerning the employee retention credit. This may be a third party that's attempting to reach out to you. The Internal Revenue Service did, however, put out a publication, I'm sorry, did put out a statement. So let me find that statement for you. I'll give you the date that it actually went out. There you go. Give me a moment. Okay, it is IR 183. It was out on October 19th of 2022, and it is warning employers to be aware of third parties promoting improper employee retention credit claims. So again, that's IR-2022-183, and it was released on October 19th, 2022. So I would suggest that you take a look at that news release for more information concerning that.
If you are a corporation and make quarterly payments, do you still have to file 940 forms?
Yeah, if you're a corporation and you're making your quarterly payroll or your quarterly payments, your 940 form is your summary at the end of the year of those payments. Correct me if I'm wrong, Tammy, but so think about it like if you're an employee and you're getting paid and then you get a W-2 issued, do I still have to file my taxes? The answer is yes. Even though you've made the payments and they are hopefully accurate, you still need to do that end of year sort of summary of it and get that filed properly.
That's correct. I agree with you.
Can any of the presenters please speak on what to consider when choosing a business checking account for a small business? Are there things to look out for when it comes to choosing a bank or account type?
That's gonna be sort of on a case-by-case basis as far as what type of business you have and what type of benefits you're looking for out of a business bank account. What I see most often with my sole proprietors or my people who are individuals who are maybe looking at doing LLCs is that they don't have a business bank account at all. So not to trivialize the question, but any separation between your personal business bank account and your business bank account is what I am looking for. And then if you're looking for a bank account with more perks, that's going to be more subjective. So I don't know if that's a very good advice, but I do like that you're looking to separate your personal bank account from your business bank account. That's my favorite thing about that question.
As my city license lists my address, which is not recognized by the post office, I've been receiving notice CP 148A from the IRS the past few years. Were they notifying me of my change of address?
Well, when it comes to addresses, whenever an address is updated with the United States Postal Service, that information is fed into the IRS system. So if for whatever reason your city has an, I don't want to say inaccurate, because for whatever reason your city believes that's the address, every time the Postal Service says that it's something different, they tell us, and then we're automatically going to send you out that letter because our records are being updated by the Postal Service. So that's something that the city needs to work out with the Postal Service to get that correct.
And possibly for your headaches, you might just want to do a PO box and have mail sent to you by the PO box. If you're able to check a PO box on a regular basis and these notices are just super, super annoying, that might be one way to solve that problem.
If I have my LLC form, but I have not yet made any money from it, do I still need to go and file taxes for the past years?
So my thought on this is that if you've had your LLC form, I think you mentioned in the question that it was just before COVID and you never made any money with it, but you also never claimed any expenses with it. You probably are okay not filing, but I would keep in the back of my mind what Tammy said, that you have to keep your records forever if you don't file a tax return. So you have to be confident that you would be able to prove, if the IRS came knocking and said, hello, this LLC has never filed their taxes and we would like to see them. You will have to demonstrate to the IRS that that LLC has never made any money. A good way to kind of so if that is not something that you would be confident in doing, then yes, you should file returns for those. And remember, your LLC, you'll have one bonus return, but it'll mostly be on a Schedule C for you. And that Schedule C just might be zeroed out, where you state, there's my LLC, 0 income, 0 expenses. That might be to your benefit if you're worried that you won't be able to prove that you didn't make any money for those years, if the IRS ever comes knocking. Anything to add there, Tammy?
No, I don't have anything to add. That is right. You do want to keep those records forever.
Including your personal bank statements, because that is going to show that you didn't do any business. You know what I mean? So you can't rely on your bank keeping those forever. You have to keep them forever.
What about tax deduction related to deducted services?
I'm not exactly sure what they mean by that.
Yeah, I'm also not sure what they mean by deductive services. Maybe we can get some clarification further down.
Do I need an EIN for an LLC?
Not necessarily. But you could go to the IRS website, click on that page that says, do I need an EIN number? And you can answer that question. But usually the time when you're going to want an EIN number is when you're going to start having to pay out to, if you're getting independent contractors, if you're paying out to contractors in any way, you're going to start issuing 1099s. Those are going to be tied to your social unless you get an EIN. So that might be when you want to start getting one. But I would recommend Tammy's resource for that.
Yes, I agree. I agree, because there's always going to be those little nuances that'll make whether or not you need one different than someone else. So check our website.
Donating my culinary services to a nonprofit.
Oh, is this our clarification then? So let me hang on, because I kind of got it open too. So what about tax deduction related to deductive services? I would say maybe such as donating my culinary services to nonprofit. I think this question is, can I take a tax deduction because if I have provided donated services?
I would suggest that they go to irs.gov to see exactly what type of, or if any, deductions they may be eligible for.
Yeah, I think I might add that there's not necessarily a spot on the Schedule C that says, and here's where you would value the amount of services you've donated. And since you don't have like a clear indicator, you're going to have to figure out if and what that falls under. And so that IRS business resources are going to be the best way to figure that out, specifically for your type of business and for the services you offer. You say culinary services, does that mean you're teaching? Does that mean you're cooking? Does that mean you're cooking for a small group? Does that mean you're catering? See, like there's all of these factors that go personally. So you're going to want to go do a little bit of research on that before you go see your tax preparer. And you're going to want to bring evidence of the value of those services when you go see your tax preparer. But it's February. It's the perfect time to do that research. You got plenty of time before April 18th.
Can you explain the difference between an LLC and a series LLC?
I don't think that I can off the top of my head. It's not, I am typically working in individuals, but I believe a series LLC is if you have multiple LLCs that are connected versus one LLC. But this is going to be a distinction that you're going to want to look at within your, I presume Illinois, but within the states that you're in and what their definition of those things are.
Specifically, if I donated more in services and donated goods versus income coming in. I think this is a continuation to the previous question.
Oh, okay, so can I deduct the value of donated culinary services if I donated more in services and goods versus income? So this person is going to take a business loss because they donated more than their income to charity. Tammy, you spoke a little bit about the employment versus hobby distinction. Do you think that this would fall under that?
Yeah, it may, and I would suggest that they go to irs.gov and actually look at the publications to get more information. Because I don't give tax advice, but I can provide you with those resources. And I don't want to give the wrong information. So definitely go to irs.gov.
I
And
think
look at-
I'll add this, which is that you're in a, and I do give tax advice, but not in front of 70 people, you know what I'm saying? So here's what I'll say. You've put yourself in a pretty precarious situation when it comes to your tax return. So if you file a tax return and your tax return says, I made X amount of money and I donated X amount of money plus 10,000 equivalent or 10,000 in goods, and 15,000 in services, that is going to raise a flag with the IRS. They are going to look at it, and I am very confident that that is going to be examined. Whether it is by a computer or by a person, I don't know, but that's going to trigger something. So what I will say for you is before you file that return, do your research and be able to prove everything on that return. If you get a letter and it says, hey, what the heck are you talking about? You got to provide the document. You're going to want to speak to a expert tax preparer, and you're going to want to speak to one who works with businesses before you file the return and talk about how exactly you want to do this and what exact documents you're going to need.
I started a self-employed business in 2021 and had health problems. I paid a state fee to keep active, although I haven't earned any income. Do I need to take any action for the last 2 years for not filing? I plan to restart the business this year.
Hang on. I'm reading that question again. I started a business in 2021 and had health problems, paid the fees, didn't have income. Do I need to take action? Okay, so this is sort of similar to our previous question, I think, where, the pandemic hit everybody hard, especially businesses. Maybe you didn't file, but also you didn't make any income. I don't know if you filed your personal taxes or not, but this is going to be the case where you are going to have to keep documentation that you did not make any income and you did not file those business taxes because you had no income or expenses for the business. And you're going to have to be able to prove that forever. So as long as you get to weigh this, right? If you're confident you can make that, you could prove that, and you have the documentation to prove it forever, then I'm going to say it's up to you whether you need to go back and take any action. If it is easier for you to go back and amend your taxes and demonstrate 0-0, and then you don't have to worry about proving it forever, you only have to worry about proving it for the next 3 to 5 years, then do that one. But keep in mind that if you don't file, you have to keep documentation forever showing why.
And keep in mind, if you go to irs.gov, it also has the information on whether or not you need to file a tax return. And it'll provide you with the information on what to do.
Looking to feed the homeless through Catholic charities and other nonprofits. I received a 501c3 letter, and I received a 501c3 and letters of validation for service rendered.
Okay, so we're continuing on that. Culinary services donated. My answer remains the same. Like, it sounds like you are already working on getting that documentation that you need to demonstrate this for your return. I still urge you to talk to a professional tax preparer, one who is experienced with this sort of business taxes, especially with businesses that do charity work. And I want you to work out a plan with them for your taxes, and I want you to work out a plan with them for what records you need to keep and demonstrate. And I also want you to look at the IRS's website and do some thorough research about this.
I don't see any more questions in the Q&A
Okay.
box. So you all have any final words to close out the presentation today? Oh, wait, you got a bunch in the chat.
Uh-oh.
Time is it? Okay, we still have time. When should you stop filing your business taxes with your personal taxes?
This is gonna be when you're gonna file your business taxes with your personal taxes depending on your entity type. So if you're an LL, or if you're a sole proprietor, if you're what they call a pass-through LLC, you're gonna file your taxes with the Schedule C with your personal taxes. When you hit the levels of corporation, S corporation, and other types of entities, that's when you become separate entities. This information is definitely going to be on the IRS website in that section about business entities. And so I recommend you look at that. Whatever type you are right now, if you're a sole proprietor or you're an LLC, if you stay a sole proprietor 10, 20, 30 years, doesn't matter. You're still a sole proprietor. And so you will still file your taxes with your personal taxes, your business taxes with your personal. It changes when your entity type changes.
Do you need to do a tax return for a nonprofit?
Yes. It's a 990 or a 990 EZ. It depends on how much your nonprofit makes. There's total portals over there at the IRS website to explain the 990 forms and explain all of that. Typically with 501c3s, it again depends on the level of the income for the 501c3, which type you're going to do. But there is a point where if you're getting grants, you need to be running audits yearly. And so talk to your auditors, or I urge you to look at auditors, but first stop at the IRS website and look up 501c3 and taxes, or look up 990 and you will find information about that.
I have 2 gigs. Can I keep the same business account with the same EIN? So I'm starting behavioral health, a health private practice in an Airbnb.
Those are different. I was going to say, if you're like driving for Lyft and Uber, as an example of 2 gigs, if it's the same type of business, doing the same thing, then you could probably keep it under the same EIN. But in your case, you got a medical thing and you got an Airbnb that can't be under the same EIN. This is why your business plan is so important. We talked about business plan. If you have a business plan, it also helps indicate to the IRS what is an expense that is following your business purpose. And so for your medical business, it's not going to make sense if you're buying like stuff for your Airbnb. If you're for your Airbnb business, it's not going to make sense if you're buying syringes. So you have 2 separate businesses. You'll probably do 2 separate Schedule Cs.
I have a vending machine business for my 2 teenage sons. Can I use a section of the house as part of the home office for storage? Also, does it work when it comes to kids' taxes? They are also on the LLC, ages 11 and 15.
You got a super complicated situation is what I'll tell you. And you're claiming that your kids are running a business, and you've put a business in the names of some minors. And so I hope you're talking to an experienced tax preparer about this. I'm not going to give you any advice about this one, because it is so complicated. You got to be doing your research and you got to be talking to an experienced tax preparer about this situation. As far as the business use a home for the storage, once again, we're going to point you towards the IRS website. There's an entire publication about business use of home. And I will say, this is one that people misapply very often. So I want you to go look at that publication and look through it very, very thoroughly. But as far as putting your kids' names on the LLC, I'm not going to touch that one, especially not in front of 50 people. So I'm sorry, I can't give you advice about that.
If my employee who works part-time at my business is offered the same job at the same type of business someplace else, and that employee is being offered a 1099, not a W-2, what rights does the employee have to request regular paychecks with proper deduction? It's for sure a nice incentive to employees to get a bigger cash rate when an employer does not take out taxes or pay workers' compensation. There is a
possibility that employees or can be miscategorized, right? Your worker categorization, you could be miscategorized. And if you believe you are miscategorized, there is a form with the IRS that you can file to demonstrate that you believe you are miscategorized and that you think that you should be reevaluated. So your employee might want to look into that, or might want to contact my clinic or another low-income taxpayer clinic locally for help in determining if they're miscategorized and if they want to go and proceed with that form. What I will say is when you contest miscategorization as an employee, independent contractor, the IRS does investigate and they do inform the employer. So a lot of times I've had clients who are miscategorized, very likely, but they don't want to proceed because it will inform the employer that they've been miscategorized. This is why I think you should reach out to or your employee should reach out to a low-income taxpayer clinic for help in evaluating their likelihood, but also the risks, so that they can proceed with legal assistance, but also with all of the information at their hand.
What if an employee did not file their W-4 or had errors on it that will impact the taxes of the company? Will that impact the taxes of the company? I'm sorry.
If you're the employer and the employee didn't give you a W-4, go give them a W-4 and ask them to fill it out, I think is probably the easiest solution there. I don't know if it'll impact the taxes of the company, because that's going to depend on, without a W-4, how have you treated their withholding and their FICA and their payroll taxes? So that's I'm going to say whether it's going to impact taxes is going to be between you and your accountants at the business. But the easiest solution to that now, it's 2023, give them a W-4, have them fill it out. If they need help, go to the IRS website for instructions on how to fill out the W-4. That's going to be the easiest way to solve your problem.
Getting the silent investor is a 1099 form?
I don't know if I understand this question. Could you repeat it?
That's all they said. Getting a silent investor is a 1099 form. Sounds like they're asking, if they get a silent investor, do they need to fill out a 1099?
This one might be above my pay grade, but I know that this is where you start entering the area of K-1 forms. So I would go to the IRS website and look about investors and paying, and how you're supposed to document in, the different types of investors and that sort of thing. There will be resources online for that. Tammy, do you know offhand, like what search terms they might want to use for that, or just plug in silent investor into the IRS website and see what comes up?
Yeah, I would just type in investor or the 1099K as you suggested. It'll pull up the information for them.
Looks like that's it.
That's
All right.
great.
Well, I hope everyone learned something today, and I appreciate your attention. I know I did a lot of talking.
I know, and I did too, especially at the end there. So hopefully it was helpful for some folks, and hopefully if you saw this one last year, hopefully you learned about new resources for this year.
If you are a part of the BACP Entrepreneur Certificate Program, you get credit for joining this webinar today by sending an email to bacpoutreach@cityofchicago.org. Again, that's bacpoutreach@cityofchicago.org. To learn more about our upcoming webinars, please visit chicago.gov/business education. Again, that's chicago.gov/business education. Thank you again to all of our presenters and have a great weekend.
Thank you, everyone.